Hello everyone, this is Sebastian McMahon from IA's Financial Group, and I'm back with the weekly economic review for the week ending January 31st, 2025. So, tariff threats seem to be more tangible this week. We had an announcement, or let's say Donald Trump said in front of the journalists in the Oval Office on Thursday afternoon that he would move forward with 25% tariffs on Canada and Mexico, quoting mostly border issues and the fentanyl as a reason. Now we are Friday morning before market open. There is a risk that when you listen to this review that there's new information that comes out. Let's hope that it's positive for Canada if it does, but I'll try my best here to give you an idea of what's being discussed. This morning we're having some good news coverage about what's going on in the Trump administration, what they're trying to do following this threat. And I'll try to show you some data about the U.S.-Canada trade relationship, which at least I think it's warranted that everyone knows the truth about how important this trade relationship is. So you'll have a few charts here. So maybe if we start by looking at this week's markets at the close on Thursday. So uncertainty, meaning that you had a bid in bonds, good return on the week for the bond, and this is about 1%. TSX had a solid week. We're up 4.6% year to date. S&P 500, NASDAQ were down, EFI, emerging markets higher, price of oil lower, and the USD is very strong, so Euro, CAD, both lower versus the USD. Price of gold higher, and we had mentioned that we had a negative view on gold in the portfolios. We closed that short position mostly because gold is not behaving in a way that makes sense right now. If the USD is strong, usually gold is weaker. It's not the case. If real rates are falling, usually if real rates are rising, rather, usually gold is falling. It's not the case. So a few things like this. So we decided to exit that position. We'll keep you posted if we change our views on gold. So maybe just getting the central banks out of the way. So the trade tariffs are muddying the picture. We had a decision by both the Bank of Canada and the Fed on Wednesday. It's rare that it happens, but it's going to happen 5 times in 2025, in January, and after that starting in July for pretty much every meeting until the end of the year. Bank of Canada now is seen cutting in March, but it warned that there's a little that it can do to offset U.S. tariff impact. So it's going to depend on what happens in the economy. So if we have blanket tariffs, this should be recessionary, so the bank should cut. But if we go with retaliation, that should be inflationary, so then they should stay on the sidelines or maybe hike. So they will see what they do. But the feeling that we have is they will be leaning more towards the dovish side, so supporting the economy by maybe cutting rates a little bit more rather than being on the hawkish side and hiking rates if there's some inflation from retaliatory tariffs. But we'll see how things unfold. For the Federal Reserve on the right, lots of uncertainty. Yet the Fed's on the sidelines for now, likely to be on the sidelines until at least the middle of the year, and then we'll reassess that view. So turning to Trump now. So yesterday we heard that tariffs were coming, 25%. He said that he would make a decision on Thursday night about oil. This is we're Friday morning here prior to market open. No news on that at all, so we don't know. This morning, lots of reports from credible U.S. media saying that Trump advisors are considering several off-ramps here to avoid the blanket tariffs. They are said to be preparing for more targeted measures. Maybe only a few sectors like steel and aluminum could be targeted for this. We're hearing that they could announce new tariffs, but maybe with a grace period to allow for negotiations to continue. We hear that there's a lot of lobbying in the U.S. from industry groups and from worker unions that the tariffs would be putting too much strain on the global supply chain. It could also increase reliance on trade with adversarial regimes like China and Venezuela. So you see that Trump seems to be very strict in what he's saying, and he's the president, so we need to put a lot of credence into that. But around him, there seems to be people working for solutions or ways out here. So we also need to take that into consideration. And a very interesting thing that I'm reading this morning is that there are some doubts that are starting to emerge about the use of emergency powers for tariffs. So Trump is signing executive actions using emergency powers on some items, and he has seen a federal judge temporarily block a White House memo seeking to freeze federal grants and loans this week. So there's this doubt that, well, if he invokes some special powers that he has, but that have not been tested in time, then maybe he could face a defeat there, and that could make things more complicated. So seems like when you listen to him when he's speaking from the Oval Office, it seems very clear, very simple, but in fact this is a very complicated situation, and we should find out more by the end of the weekend for sure. So again, I hope that I'm trying to be useful here, but there's so much uncertainty that maybe when you listen to this review again, you'll have new information that I don't have now, but let's hope it turns out the best for Canada. So now maybe just a quick fire, a few charts on the Canada-U.S. trade relationship. I think everyone should see those charts at least once because we hear a lot of stuff in the media. So here I'm using as a title here actual quotes from Donald Trump. So he says that Canada's been very tough to deal with over the years, and it's not fair that we should have a $200 to $250 billion deficit. So Canada's in red in the charts here. So the deficit, the trade deficit with Canada over the last 12 months, the sum of the last 12 months is about 50 billion. So it's not 200 and 250 billions. China has a deficit of about 300 billions with the US. Canada, it's and if you take all of the trade deficit that the US has with every trade partners, Canada's trade deficit is about 4% of the total pie. So we're not, at the crunch here of, or the crux rather, of the issue. If we go to the next slide, Canada is the largest export market for the US. So the US, they export not as much as Canada, but they export to Canada more than they export to the regions in the world, the countries in the world. Maybe a caveat here is that for Canada, the US, the exports to the US represent 20% of our GDP. For the US, exports to Canada is only 2% of GDP. So they do have a significant advantage here in the negotiation, the leverage that they have through the negotiation here. But still, we're their largest export markets. And on the right, to see how balanced the trade relationship here, we did the ratio of exports to imports of goods to the US. And the ratio is very well balanced for Canada. It's 0.85. So we do export more than we import from them, but that is including oil. And if you remove oil, it flips, but it's very balanced. China, for example, on the far right, has a very unbalanced trade relationship with the US. So it's just this rhetoric that we're hearing, which is, it's Trump's way of doing things, but it's important to focus on the facts. So the Canadian delegation, of course, has very strong arguments to make here, but are they being heard? Again, that's another question. Trump says that they don't need Canada's oil, gas, vehicle, or lumber imports. Well, in fact, of the oil that they import, about 65% comes from Canada. Natural gas, it's 100%. Lumber, it's close to about 3/4, and 1/3 of the home building softwood lumber needs from the US are shipped south from Canada. So you would be impacting directly the housing market if you did say that, well, we don't need that, let's tariff it more, because it's already well tariffed. It's about 25% tariffs already on Canadian lumber. So there's an issue there. The car industry, it's very well integrated in North America. Before a car is built, parts are crossing the border 5 to 7 times on average. So it's not that simple. So as you can see, the relationship is very tight. It's not true that they can just say, we don't need that anymore, let's do that domestically. And finally, the provincial exposure to Trump 2.0. As I said, about 20% of Canada's GDP is made up of exports to the US. But if you look at the provincial breakdown, on the left you have Alberta, New Brunswick, so they're exporting mostly oil. Saskatchewan exporting potash. Quebec's at 15%, a bit lower than that. But as you can see, provinces need to work together. A united front is very important here because they need to share the burden, which is pretty uneven among the provinces. So it's a very complicated situation. Let's see how the weekend unfolds here. So getting back to what we'll be watching next week on the macro front, net change in employment and the unemployment rate in Canada. In the U.S., we'll have the ISM manufacturing and services indices, and we'll have the change in non-farm payrolls and unemployment rate. So we should be adding 150,000 jobs in the U.S. Unemployment rate should stay stable at 4.1%. So still very much a Goldilocks situation for the labor market in the U.S. So that wraps it up for the week. Always a pleasure to serve you. If you enjoyed this review, please share and come back again next week for more information on all of this trade situation.